So hi all, let's continue this chapter, the assessment of company, and let's complete this chapter. Okay, there are not very much section remaining, so let's complete it now. Okay, so yes, last section was of 155 BAE B wala section. 15% was the rate, okay, which were condition was similar to the previous sections and all. Okay, so let's go for 115 BBE, which is of deemed income. Okay, so deemed income has been introduced with effect from assessment year 2013 and 14 with an intention to tackle with the people who show their black income, okay, as white by paying less tax. Therefore, any income for which SSC would not be able to explain the source now will be taxed at the rate of 30% instead of 10 or 20%. So, here for those income which is undisclosed income, or if, which means black money, okay, where the person, the SSC is not able to justify the source of income, where this income was actually arose. Okay, so in that case, for that income, that would be assumed as deemed income. First of all, it's going to be your income added back to your return. Okay, and with that, taxable rate is going to be 30%, not 10 or 20%. Okay, so yes, that was section 115 BBE B. Okay, so this B says about that undisclosed income. Okay, or where they are showing, the SSC is showing black money as white by paying less tax. Okay, so yes, this was this section. Let's go for section 115 BBF, okay, which is best friend, BBB, best friend, let's take it. Okay, so dealing with patent tax in India, rate is going to be 10%, but there are some conditions written in this section. Let's go and check out what are the section here. Section 115 BBF says, which says it provide the concessional rate of taxation at the rate of 10% on royalty income in respect of exploitation of patent. This is specifically related to patent. Section is BBF, best friend. Okay, so this section, let's remember this section. Okay, 115 BBF, rate is going to be 10%. Silent feature of section 115 BBF is provided below. Application to Indian resident who is a patentee, first of all, who is eligible taxpayer. Okay, in this case, for this case only, this section is going to be applied. Only such patent which are granted under Patent Act 1970 are going to be considered. Patentee is any person who is true and first inventor of the invention which is actually created by him, okay, whose name is entered on the patent register as patentee as per the Patent Act, and also include joint true and first inventor with him. Okay, so and apart from that, total income of eligible taxpayer must include income way of royalty. Okay, so royalty income in respect of patent developed and registered in India, and at least 75% of expenditure is actually incurred in India, okay, by eligible taxpayer for the invention. Okay, so this is the main thing which we have to keep in mind, that the 75% of expenditure should be from India, okay, by the eligible SSC taxpayer of the inventor. Okay, yes. And yes, that name should be registered in Patent Act. Patentee name should be registered, okay, and he should be eligible taxpayer, in which also include royalty income. Okay, so yes, the rate was 10%. Section was 115 BBF, best friend. Okay, so first and foremost, application of section 115 BBF is not mandatory, and eligible taxpayer has an option to avail the benefit under section 115F. Further, once an option to avail the benefit of this section is exercised in any year, eligible taxpayer is required to continue avail the benefit for next 5 years. In case option is not exercised in any of such 5 years, eligible payer will not be eligible to take the benefit under section 115 BBF for the next further 5 years following such year in which option is not exercised. So, which means when this option is availed by the SSC, okay, section 115 BBF wala section, okay, so that this section is going to be applied for 5 continuous year. Once any violation is done by patentee, in that case what is going to happen, definitely for further next 5 year this person cannot avail this section 115 BBF wala section. So let's go for 115 BBG. BBG says about the carbon credit tax rate is going to be 10%. Okay, so yes, this there could be a question which may be in form of MCQ from these sections. Okay, let's go for the 115 BBG. Okay, where the total income of the SSC include any income by way of transfer of carbon credit, the income tax payable shall be aggregate of the amount of income tax calculated on the income by way of transfer of carbon credit at the rate of 10%. This we know. The amount of income tax with which the SSC would have been chargeable had his total income has reduced by the amount of income referred in clause A. Notwithstanding anything contained in the section, no deduction in respect of expenditure or allowance shall be allowed. This could also become in form of MCQ, that do you think any expenditure is allowance which is related to carbon credit? No. No of the deduction in respect of any expenditure or allowance shall be allowed. Okay, so no deduction or any allowance is not going to be allowed. Okay, to the SSC under the provision of Act in computing this carbon credit टोटल इनकम वगैरह. ठीक है, लेट्स गो फॉर BBJ. वी नो दिस सेक्शन, कहीं तो पढ़ा है जनाब, कुछ तो रिलेटेड है ना. लेट्स थिंक अबाउट कौन सा वाला सेक्शन था, कौन सा वाला चैप्टर था. चार्जिंग सेक्शन विच इज़ रिलेटेड टू विनिंग फ्रॉम एनी ऑनलाइन गेम. Yes, remember TDS वाला section ना, TDS वाले chapter. Yes. So 11 by BBJ, 115 BBJ says about the online gaming. Winning from any online game shall be chargeable to tax under the section of Income Tax Act 1961. The rate is going to be kitna percent? It's going to be 30%. Yes, the rate of tax on such income shall be 30% excluding surcharge and cess. Yes, the section shall be applicable from 1st April 2023. That is, any income from online game from the said date shall be taxable under the section. So yes, this was small section. Let's do the revision jaldi. 115 BBE undisclosed income 30%. Okay, BBF best friend wala section is going to be of, which is of patent 10%. Carbon wala 115 BBG wala section is for carbon credit 10%. Okay, and BBJ is of online game 30%. Yes, let's go for BBD, which is tax on certain dividend received from the foreign company. So this is all about dividend which is received from the foreign company, where the total income of the Indian company include any income by way of dividends declared or distributed or paid by the specified foreign company, the Indian company shall be liable to on such dividend income. It's going to be taxable at the rate of 15%, surcharge 7%, 12% and 4%. We know this. Okay, so simply can I say the rate is going to be 15%. From surcharge from 1 crore to 10 crore, it's going to be 7%. Yes, if it exceeds 10 crore the total income, in that case the surcharge is going to be 12% and then definitely 4% cess. ठीक है, 4%. ठीक है जी. Okay जी, and this was the total income tax rate is going to be 15% on dividend income, and what is going to be the section 115 BBD, 115 BBD. Okay, hope so this was also easy. ठीक है, on other income as per the provision of income tax. Okay, let's go for minimum alternative tax, which is 115 JB, and definitely question would come from this section also. Every company is liable to pay a minimum alternative tax of 15% of book profit. So first of all we have to understand what is this book profit, है ना. हाँ जी, plus surcharge if any, and cess, health and education cess. The tax payable by the company is either tax on its total income or minimum alternative tax, whichever is more. So tax is paid by the company either as per the normal provisions or the MAT provision, whichever is higher. Okay, where a company is paying minimum alternative tax if it is allowed tax credit in respect of excess tax paid over the tax on total income, which is tax credit. They are talking about the tax credit, which means MAT less the tax on the total income. This tax credit can be utilized against the tax paying. Okay, so this tax credit can be utilized against the tax payable on total income in the subsequent assessment years. So let's go for the last line. Tax credit of any previous year can be carried forward and utilized toward the tax payment for in subsequent 15 years. Okay, so this was all about the MAT. Let me go for the table which is mentioned here. Okay, and further in next lecture we will solve one or two questions from this chapter, okay, which is related to MAT especially. Okay, so computation of book profit, how we are going to compute book profit. Okay, as per section 115JB, yes, we are going to add the net profit as per the statement which is given in the question. Okay, in this we are going to add the following things. First of all, income tax paid. Okay, paid, payable or provision of the income tax. Remember, this is computation of income on the basis of what? MAT provision as per 115JB. Okay, and at the same point we are also going to deduct some of the provisions similarly. Okay, so let's go for the things which are we are going to add back. Okay, so we are going to add the tax income tax paid. Okay, amount carried to any reserve, provision for liability which is other than a certain liability, which means we are going to take the uncertain liability. For example, there could be question have given the certain liability and the total liability, which means we have to take out only uncertain. From total liability we are going to deduct that certain. Okay, so we are going to only take the uncertain liability here. And then loss of subsidiary or the provision for the losses of subsidiary is going to be add back. Dividend paid or proposed, expenditure related to any income which is not subjected to MAT. And one more thing, yes, here in the fifth point it was mentioned that dividend paid or proposed is to be add back, but one thing which I have to mention, expenditure related to dividend paid is not going to be taken here. Okay, we are not going to get any benefit of that. Okay, yes. So yes, expenditure related to any income 6 point which is not subject to MAT is going to be exempted. Amount of depreciation, yes. Okay, deferred tax liability or the provision of deferred tax liability. 9th, provision for the diminution in the value of asset, which is like for example provision for the doubtful debt or provision for fall in investment value. 10th, expenses related to share of income from AOP. Again, expenses which is related to share of income from AOP, on which AOP has paid the tax at maximum marginal rate. 11th, amount standing in revaluation reserve related to revaluated asset on the retirement or disposal of such asset if not added in the statement of P&L, unless amount withdrawn from any reserve or provision of included to statement of P&L. These are the things which we are going to deduct. Okay, yes. Less then next thing is income exempt from the tax if such is actually statement included in the statement. Okay, P&L account wala. Depreciation as per book. Earlier what were there, amount of depreciation is going to be add back. Okay, but if definitely there would be depreciation which is as per book of account, that we are going to deduct. But one more thing, other than on the account of revaluation reserve. Okay, which means we are not going to take the revaluation reserve wala. Okay, okay. Less amount of withdrawn from the evaluation reserve and included in the statement of P&L account to the extent does not exceed the amount of depreciation. Definitely, which means if amount withdrawn is to be deducted. Okay, but from this we are going to deduct depreciation wala part. Share of income from the AOP BOA on which the AOP BOA has already paid the tax at maximum marginal rate. Brought forward loss or unabsorbed depreciation, whichever is lower. One more thing, in this part they are saying either brought forward losses or unabsorbed depreciation, whichever is lower. but there would be some cases where we are going to take both of the cases, okay, where in case of insolvency and all, application is pending, okay, in that case only. In that case, we are going to take both brought forward loss and unabsorbed depreciation. We are going to deduct both things. Okay. Profit of sick industrial company during the period of sickness, which is, yes, I was talking about this point. Okay. Yes. And last, deferred tax asset if it is included in the statement of profit and losses. So this is how we are going to compute book profit. Okay. Don't get confused here. We'll solve one or two questions, then only we'll get to know how we are going to compute that book profit and what are they saying. Right now it's just going like this. Koi baat nahi, we'll get everything. Okay, don't mix up everything. Okay, up to this you have to do your revision. Let's do the revision very quickly. Okay, so yes, from the very beginning we are going to do the revision of tax rates. Okay, so yes, for life insurance 115, kaun sa wala? B, only B, 12.5%, 115 BA 25%, yes, 115 BAA 22%, yes, 115 BAB कितना वाला percent? 15%, okay, जी हाँ, there are some condition which the company have to fulfill. If they are falling under that condition, in that case they can go for these sections, okay, yes. And let's go for the other BAC, which is for individual, HAF, AOP, BOI, AGP, okay, not for the cooperative society, okay, कौन सा वाला percent? 5, 10, 15, 20, 30 वाला percent, and income increased by 3333 lakh, okay जी, okay. Let's go for the other section, BAG, bad wala section is for cooperative society. What was the rate? 22%, okay. Surcharge is 10%, 4%, okay, 4% cess wala part. And what about the one more section is of cooperative society, 115 BA wala section, okay. Rate is going to be 15%, yes. Let's go for BBF. BBF is for patent, 10%. Remember this question, okay? This could come in form of MCQ, and now MCQ are of 30 marks. That the weightage is more. Earlier it was 20 marks. It means 10 marks is directly increased, okay? So you should definitely know the basic thing now. Each and everything is very important, guys. So we cannot leave any part. Question may come in form of MCQ also, okay? So we cannot leave it. Okay, let's go for the other carbon credit, 115 BBG, what were 10%, okay. So yes, BBG is of charging section, kaun sa? Online wala, okay, yes, 30% is going to be taxable rate. And for the dividend which is received from the foreign company, the rate was of 15%, yes. And the section 115 BBD, bade log ji, bade don, ठीक है, okay. So it is for foreign company when the dividend is received from the foreign company, okay. 15%, 7% surcharge or 12%, okay. 1 crore to 10 crore, more than 10 crore, okay, plus 4% cess. Minimum alternative tax 15%, ठीक है. And we'll go for one or two questions, then we'll come to know what is this MAT provision going to be applied and what are they saying, ठीक है. So don't worry, don't panic, we'll do it. ठीक है. Up to this, hope so everything was clear to you. Go for revision, guys. Revision is must. बार 100 बार 1000 बार, ठीक है. And that's it. Stay consistent, stay loyal to your studies, ठीक है. Don't compare your revision, your studies to any other person, okay. This is your own struggle. Nobody is going to come and help you, okay. You are in a situation, if you are stuck, you have to get out, okay. Don't overthink anything, okay. You cannot, don't get messed with any person or anything, okay. Okay, that's it, nothing else, guys. Do your revision and stay consistent. This is the only mantra, and have patience. You're having a patience, this is your all power, okay. Your patience is going to be your power, okay. Till then, we'll meet in our next video. Do your revision. This is Soumya Santosh, Toodles, guys.